Welcome to another episode of Weekend Chart Talk, brought to you by DayTraderSetups.com. We'd like to ask you to subscribe to our channel while you're watching this video just by clicking the subscribe button, and stay up to date when we put out the new Weekend Chart Talk videos, along with all the other videos that are available on our Day Trader Setup YouTube channel. We have TC2000 training videos. We put out trading recaps from time to time, and just general trading ideas that we use at DayTraderSetups.com. So please subscribe to our channel. We appreciate you watching. Okay, on the Weekend Chart Talk video, what I've set up here is a look back to the bull breaks that we've featured each day on the Swing Trade Day Trade watch list. One thing I want to show you is how the stocks that show up on the daily bull break are excellent stocks for day trading. They tend to break again in the next few days, sometimes big the next day again. And we're going to take a look at where they progress to. So what I have here, this is our weekly list. We ran all week on our Swing Trade watch list, and we've been talking about the columns. There's nothing any different here about that. This was Friday's bull break list. There's already a video out for the 8th on the watch list. These were the bull breaks, where they broke at, the periods and so forth we've been watching, which are these lines here. So this particular stock, we'll look at AIG. It went in the bull zone when it crossed this level here at 60.60 on Friday. Now it didn't progress but a nickel above it. It went above and pulled back. It's fighting a 50-day. Anthem came up through at 231.01 and finished from where our intraday subscribers picked that up at 231.01. It's up 333 by the end of the day, above and beyond the breakout level. And so that's how subscribing to our alerts can get you an early jump on some of these, or at least where you can take a look at them toward the end of the day, maybe for setting up yourself a swing trade, whether it be in the stock or in options. KMX, as we've been watching, broke out at this level at 69.34, which actually was clearing a daily resistance level, and also up through the 50. So it ended up $1.70 from the level. It was up a total of $2.79 for the day. And now this stock will be followed through in the days to come. And it ended up, this stock, this is your weekly chart down below. Really big week on KMX. It's been coming up all week. KMX on my active trader alerts, that is something different than these bull breaks, actually came up on the 3rd about 9:45 in the morning around $65.81. And it's never slowed down, not a single tick since then. That's an entirely different set of this part of the subscription service. What we're going to be featuring in the Weekend Chart Talk going forward is this layout for the bull and the bears. I'm just doing the bulls today. There weren't hardly any bears last week. This was Friday's alerts. This was Thursday's alerts. So the video came out Thursday evening after market. These were the stocks that were on it. The bull break trigger price is carried back to that day, what made it trigger, and the profit is so far since this went off. And then I added another column for the P&L at the high since the break. So in this case of APTV, it broke on Thursday, which was this day's chart, it broke at 87.75. It's up 382 since then, and at its peak it was up $3.96. Now when this broke 87.75, which was basically on the gap up that morning, it triggered early at the break of the morning. This 382, 266 of that came in on Friday. So if you pick this up early Thursday morning with our premium alert package, you might have already been in it before the end of the day and set yourself up for this nice move the next day. Even if you waited to the end of the day and picked up our alert, you might have could have got in this great day trading stock again on Friday morning when it gapped up, and it actually came back and made a low there of 89.52. And we show you these lines when we show in our video that this was breaking out here at the end of the day. I show you the lines, and you know that the high here was 89.64, so that's support and resistance. We got to get through it. It got through it, and it came back down and tested it within 12 cents on this low after that little open, and then this stock ended up running up again, $2.66 just on the day. Another example of how you can use this was Friday, Thursday, 1 day back, 2 days back. That's what the 0.2 is. 3 days back, 4 days back. So this was Friday, Thursday, Wednesday, Tuesday. This was last Friday on the last day of trading day. VMC came up. This is an example of now this is 4 days ago. So this was Friday, Thursday, Wednesday, Tuesday, Friday, the 5th day back. So dot 4 is 5 days ago. This actually triggered here right at resistance, and it actually closed back below the trigger price on that day. 128.36 intraday it triggered, and it closed below it that night. So it didn't actually show up. It closed a penny above it. 128.36 is the trigger price. So when it triggered that morning, 128.36, it went up to a high of 129.63 during the day, pulled back and closed at 128.37. So if it closed a penny lower, it wouldn't even been on this alert. It would have showed up the next day when it gapped up. But because of that, it did show up, because that was my trigger price, was 128.36. It's on the list, and it had a 1 cent profit on that particular day as we looked it over. Then the next morning, this gapped up on Tuesday, and it went back and made a low of 128.96. And I teach you about my lines, that if you're a subscriber, you have them, but I show them to you. I don't tell you what they are, but you can figure out where they were from. But if you're a subscriber, you actually got these charts with these green and pink lines. And this high right here is in this box. You look for where my mouse is. It's around 128.70, 80. You look in the box and find the closest line in the green numbers. 128.77 is the number. Came back down 128.96. It did not go back to that support line. It's just resistance. When we cross it, it's now support. So that's an awesome place to get in this stock the next morning. And then from the trigger price, currently it's $3.54 above that price, even after this 2-day pullback. The peak from the entry was $7.09 up at this high. So that's what I'm providing this to you for, so you can, at a glance, you can also pull up all the charts you want on your own, on your charting system, to look at what I'm showing you. But I'm giving you a chance on the weekend to take a look and say, hey, this went off at 128.36 4 days ago, and the peak over the next 4 days was $7.09 profit. It may still be at $7 here, but in this case, it's a stock it pulled back. Why did it pull back? It ran into resistance. You see the resistance when I'm showing you the charts at night. This green line's already here. When I'm showing you on this day, you can see the resistance levels it's going to run into. And it actually did on this second day up. 135 is where it went, and the level was 134.92. Looking again in the box, looking for the levels near where my mouse is at. The next two levels above that, at this time is only one level above that. It's all the way up here at this upper price of 138.18. Now this stock rejected this price that day, went up above it 8 cents and pulled back. The next morning it gapped above it, pulled back, couldn't hold this level. That's where you got to decide, do I stay in or get out? And if you're in a couple of days swing trade and you got $7 made, or even $6.50 or whatever, you're going to want to protect those profits. If you're in a option trade, you're certainly going to want to be first. Either you got out right here and say, hey, I'm happy, I hit resistance, it might keep going, might not. If you want to wait till the next morning, it could always gap down to here, but in this case it gapped up, and when it started to fade you could have got out. But that's what I'm trying to share with you here. Now what I'm going to do every day, every weekend, is I'm going to take and I'm going to pull this level down so you can see all these charts that came in and what they did, and that way you can stop this video and you can go back and look for yourself. You can pause it, and you've got the profit at the high after the trigger price. Like this stock's down $1.24. Profit at the high was only up 41 cents from the trigger price in the last 2 days, so it came down the next day. This stock was up $5.97 on Friday. It's up $7 at its peak. It's still up $6.43, and this is at old highs. It went back up here and revisited, and it probably continues on up on Tuesday. Could do a day or two, pull back and go again. Right now this is still intact. This is my bull zone where we broke here, and it's continued to hold all the criteria, but it is at a resistance line. And then I'm going to pull this one down. I want you to see all the charts and be able to pause this, and we can't get them all in one, so I'll give you a look right here. As many of these 45 stocks that was on this particular day's breakout. So right now you can see Fridays, Thursdays, most of Wednesdays, and then I'm going to slide it down for you, give you a chance to see the bottom of the list, and then you can pause this wherever you want to and pick up on these stocks and study them yourself. I'm also trying to use this review time to look at a few stocks and show you how they resisted the lines that I have on my charts, like you saw there on VMC. Now I'm going to adjust these back up so you can get the next 2 days. I want you to have a chance to see all the stocks, and I'm going to let them sit here long enough for you to be able to pause and get a read. You don't need much to get a read on this one. So you've got to look at this day's, and then I'm going to slide it down for you so you can get the other end of it. Make sure I get in the right spot. Nuvia's as far as you can see here, so as long as we keep that in view, you're going to get to see them all, and we did. So now here's where the previous screen was at, and you got the rest of them. And that's what I'm going to do each weekend, is bring these back up for you, let you see where the P&L is currently at based from 3 days ago, 4 days ago, 2 days ago. You can go back and look at these stocks and see if they're still moving, why they pull back, and hopefully learn from that, and learn that maybe they pull back on some of my green and pink lines came into play. And each week we're going to try to cover a few, and we are going to cover a few more here, just kind of explaining what we're doing and giving you a chance to pause the video and take a screenshot if you'd like, or just pause it and look and pull your charts up on any of these stocks that you still find interesting. Remember, this is the high profit from the break of this number, and this is the current level from the break of this number. So Netflix has been in a huge move. It came up This is Friday. Point 1 was Thursday. Point 2 was Wednesday. It came up Tuesday morning when it broke out. The level of the breakout's right there, 192.64. So basically, when it gapped, it crossed that. That was here. Had that big monster day on Tuesday, and it's had good days every day. Rested a little bit on Thursday and pulled back to my support resistance line. This is an old high. Was resistance. It came back, retested it, closed above it, and did gapped up on Friday, pulled back. It's been a great day trader all week. This is one of my regular stocks I watch all the time anyway, whether it's breaking out or not. It gives great day trading. Not every single day, but many days. We're going to continue on and look at a few more of these, but you've actually been able now to capture each screen or pause the video, and you can look. You've got an opportunity to look at everything I put out for the last week right there, and the values that they were put out at, and study those and see what you could have seen at the end of the day when the video came out, or what you could have possibly seen and got involved in intraday before the video came out at night, and see how catching our premium alert system. All you got to do, our premium alerts are $69 a month. They come out on a website, and all you got to do is trade 200 shares on one stock 35 cents earlier than you may have traded it looking at it at the end of the day or the next morning. 200 shares, 35 cents, that's 70 bucks. One trade a month. If you make a decision 35 cents earlier on a smaller trade, is 200 shares, pays for the entire month subscription. I'm going to look at a few more stocks here and continue to try to show higher levels and so forth. There's no way I can look at all of these. You can look at any of them you wish to. UPS was one that broke out again on Wednesday at 121.71. That was the middle of the day, and it's right about here. I also had a green line at 121.75, so it was breaking through some previous highs in the past. It had some higher highs. When you see a green line with another green line above it, it's been higher. This was a place that had been a resistance level before. It had gotten through it slightly and then pulled back. You wouldn't be seeing this green line up here at the time you're seeing this. It's still flat. That tells you, I'll see if I can focus this in that much for you. You're looking at this on this particular breakout day. End of the day, you're here, and you know you got an old high up above you because I got a green line. Of course, you can see it right there on the chart. If you got an intraday alert from me, you got it right here on our alert, premium alert services. You got it when it got to 121.71, which is right here. And you also see the green line because you're going to have access to these green and pink lines through various means to have them on your charts to know where some daily resistance and support levels may interfere with your trade or support your trade if you get out above them. In this case, you could get in early. This stock closed the end of the day almost $2 above this alert. That's a prime example of what I was just talking about. If you got in 35 cents before the end of the day, even if you didn't get in here, you decided I'm taking a position, and you got in this stock during the day here just on 200 shares at 35 cents, then you're already in the stock for the next morning gap up. So if you watched it at the end of the day, the earliest you could have got in here was after the gap up at 124.15. It did come down to 123.90. So even if you got in the low of day right here to the penny, you are, I'm trying to see what's the difference in the close there, 67. That's 23 cents times 200 shares, almost pays for a whole month subscription right there, just by knowing this before the end of the day video came out. He said, hey, I'm going to take this thing long, I'm buying some options, or I'm going to go ahead and get in the stock. If you get in it somewhere between the $2 move from my alert, you pay for a month subscription by the close of the business day. 200 shares, 35 cents, $70. Subscription, $69 a month. We're going to look at some more stocks here. I'm going to take a moment to locate one of those. This PKG, it also broke out on Tuesday at a level of 121.81. That was right in here near the open. It opened at 121.52 and then broke the 121.81. Another example, if you got the intraday and decided to get long this would have been a great one to make an early entry on. For a couple of reasons. One, you've had this old high back here that you've been basing at for days and made a slightly higher high, and then it broke through that. So that tells you, hey, I'm running into a breakout here. This is looking back further on the daily. And this is slowing down a little bit now. I don't know that it's going to pull back or sell off yet or keep going or rest today. It may pull back to, a lot of times they'll pull back to my upper pivot line here, which any subscriber gets to see this from me. They don't get it on their charts, but 116.56 is the 50-day. That's not what I want to look at here. I'm sorry. Down here, blue line, 126.50 is that level. That's not a support line, but many times they'll pull back and test that when they're in an uptrend and rest a day or two and then break on out again. So I'm not sure what this is going to do if you're already in it. It's a very strong breakout, and then you can see down here on the weekly, and the weekly is really just in the first week of this bull breakout. It could continue. This could continue for quite a while. It could rest here for 2 days, pull back, and then go up and finish higher on the end of the week in 5 days, and you'd still be well intact on a swing trade. And the weekly is always a better, if you're in a longer term trade, the weekly is always a better place to enter it at. Now, when stocks are making higher highs, there's no way to know where they're going to eventually deplete the run. Always remember, if earnings are around the corner, don't get caught with a lot of profit made holding into earnings. You see it all the time. Why did my stock drop? They beat earnings, they beat revenue, but the stock dropped $9 in the next 2 days. And of course, the ones that don't meet earnings, they always drop. So don't find yourself holding a big trade into earnings and give back your profit. One of the best traders I ever followed, even he would say, I'm taking 90% off, even if he wanted to hold some into earnings. He was not holding that big position. But this trade, from the breakout at the high, $7.34 profit per share. And even now with the pullback sitting on $6.66 per share profit at the end of 3 days here. So great little multi-day move on this stock. Let's pick some more out, just some random. Here was Anthem. Now this is not a day trading machine because it is very volatile on its sometimes can be a little bit of lighter volume. It did have 1.4 million shares on Friday, but it can jerk the bid ask around and kind of hurt your feelings if you're trying to day trade it. We had a break through the level here. That's what the little green line means, and since it was actually on Friday's breakout, that is the level that's shown right here at 231.01. This stock opened up and progressed through the 131.01 as the day went by, up by 80-90 cents when it triggered and came out intraday and ended up closing the day $3.33 above that number. Look at OKE, give you a little something quieter. At the peak up 243 from the alert at 53.90. Currently 216 up over that level. And this broke on Tuesday. And the level it broke at, you can see there, was 53.90. About where I have my crosshairs now. And you can see the weekly down below there on the bottom chart, actually right above the 50 week. And your 53.90, actually taking out the week before's high, was at 53.89. So when it broke on my daily bull break at 53.90, it was taking out last week's high as well. And you ended up getting a 3-day nice little run. Now it's hit my upper pivot and is hesitating there. That don't mean it's resistance. That's what they do. They work their way down and up, and old highs, and then they level park. This is a classic of the way I teach this. They come down through my pivot, target 1, target 2, bounce, back and reject the 50, back on down to target 2, continued on down into my lower pivot, made new lows. Now it started up, got through my pivot, target 1, little pull back, target 2 reached, another little pull back, and then continued on up to here. It's made it 2 runs from here. Anytime I start at one of these positions, if I start down here, I'm wanting to get to here. If I start up here, I want to get to here. Target 1, target 2, 2 levels. Well, here we started here. Target 1, target 2. Those are little intraday workings. These also work on weekly charts. If you're trading on a long-term swing trade and you start down here, maybe we get the bull break on the daily and it's right coming off a weekly lower pivot. Hopefully that can work your way all the way to target 2 over a period of several weeks. That's why weeklies are better swing traders for you if you're looking for those long-term trades. If you're looking for the shorter-term trades, you want to use the daily. But like this stock, if you had a weekly that looked like this and it ran up to here, you might want to take your profits, let it pull back, and then come back in again. You still have several weeks, and it really didn't get going until it would have got over here on this particular week. But this is a daily chart, but it all works the same in the long grand scheme of things. So I like to refer to weeklies and see what's going on as well. This had a good run, pulled back a little on Friday. This oil sector is so influenced by so many other things going on. It's a hard sector to trade, but it's been on a good run here for a few weeks. We've got the breakout was down here, like I said, 53.90. Gave 2 nice days up and peaked out at a $2.43 profit. Just showing you some lower volatile stocks that might have really cheap options if you're an option trader, or you're not wanting to trade the higher risk stocks like the Nvidias and the Netflixes and things like that. Now keep in mind, I'm scanning 5,000 stocks on what you're looking at. I'm scanning them from $3 to $400. I have some ATR minimum volume requirements. I'm not looking at stocks that's trading 20 and 30,000 shares a day. I want you to have some liquidity. I don't want you to have the jerking around that you see from some of these other stocks. Some of you are emailing me and asking, why don't you have CNET? Why don't you have WATT? I'm going to show you a couple of charts. This is not what I trade. I'm not even interested intraday. There's plenty of guys that trade this stuff. If that's what you're interested in, no problem to find somebody to follow. The reason I don't trade this stuff, one, I sure don't want to recommend. Let's say right here, you had this breakout. Oh, I'll put this on swing trade for you guys, and the next day it runs again. and next day it beat your brains out. That's not what I do. And then here again, it did the same thing again. Kind of breaking out right there. It's actually on my bull zone here. It's just $1.21. And then boom. Nobody's got a clue this is going to do this. And then when it did this day, of course, it went all the way to $12 when all the shorts got to covering and so forth. This is not what I trade. The movings around in this stock, you know, you could get in this stock 4 times day trading it and lose every time. There are guys that trade this well, but they chop all over the place intraday and intra-bar. You can look and see 1 and 2 minute candles that's got $1.25 range in them, and not just up and down. It's just not what I do, and you're not going to see me recommending any of this stuff. WATT was a monster last couple of weeks. You know, this stock gapped up on this day. It could have just as easily came back down on this day. It gapped another day, and then you see the third day it flushed. It opened up here at $30 and went all the way back down to $19. You couldn't have bought options on them because they were so, I'm sure, volatility was priced into where you say paying a huge premium. Now this one has based on daily support here. It held it, this old high, held it here, and it held it here. It may break again, but it's not something I can put out on the swing trade list, and I don't even look at this stuff day trading. Got no interest in it. I like my money too much to risk it that much. When I got these 1 minute and 2 minute candles that are putting in $1.50 ranges and wicks up and down, and they're jerking the bid and the ask all around, that's not what I do. I kind of stick to my list of about 40-50 stocks that I know if I just watch them cycle, I can make plenty of money, and occasionally add in something that's breaking out that you see from these other stocks I'm watching. You know, I'll add something that I normally don't have on my 30 or 40 cent break list that's breaking out. Retail I almost never trade. I just don't like the way they trade intraday. I think they get manipulated a lot. And there's a lot of stocks I don't trade intraday. I don't trade Facebook generally intraday. It gets jerked around a lot. It's so much volume and so much high frequency trading in it. I just rather leave it alone. I know which ones tend to break with momentum rather than all the jerking, and I generally try to trade those, and that's how my stock selection is on the stocks that I watch. I got about 105 or 6 stocks I'll take intraday alerts on for my day trading, and I don't even look at this other stuff unless I've handpicked 1 or 2 stocks off these lists. And none of the stocks that I trade are probably even under $50. There's plenty of chat rooms out there if you like the lower price stuff. My room, there's no need to come in there looking for anything, even $10 or $15. You're not going to find it. You're never going to find the CNET and the white. Not going to be in my room. On the premium alert service, the point I was making on the 5,000 stocks that I'm scanning here and putting out for you on the evening videos, I do not scan that many intraday. I got a list of 475 stocks that I send out intraday alerts breaking the bull zone, the bull break, the bear break, the weekly and the daily. And those same 475 stocks, I'll look at some other breakouts that won't be this strong, but they could enter into a multi-day active trader run like the KMX I talked about earlier that came in on the morning of the 2nd down here. It came into one of my alerts that I watch for my day trading, and it's not on my 100 stock list, so I didn't day trade it, but it came in. I have active trader alerts that come off that same list, and it came in on that list Thursday morning around 9:45, or excuse me, not Thursday, the 2nd, around 9:45. That was all the way down here. It crossed over there at 65.98 and continued on up ever since then. It's never, not one thing I'll look at has changed about that stock from that point. So it was a great active trader alert, and it got stronger and kept clearing different levels. I got 2 or 3 things that I scanned, and that was the first alert on it. And then it, of course, as it progressed on, it triggered off actually 3 more alerts after that through the next several days. Don't forget to subscribe to our channel while you're watching our video. You can follow us on Stock Twits and Twitter, Day Trader Setups. And you can type in www.daytradingcharttalk.com. It'll take you right to this that we feature these videos on the weekends. And that's Day Trader Setups on Twitter and Stock Twitch. Daytradersetups.com is our website. And Premium Alerts .swingtradersetups.com will take you over to tell you about what we got going on over there. Swingtradersetups.com also, and that's $69 a month for our real-time live alerts on our website. And remember, that does not include all 5,000 symbols like you see us scanning here. That includes about 475 symbols we're watching intraday on the intraday alerts. And then at night I try to bring you all those and more on the end of day video, which usually the ones that are not on that are the slower moving stocks, and you can make a longer, slower decision about. Don't forget, you can go back to the beginning of this video where I opened up these watch lists for you, and you can pause and you'll be able to see every single symbol that was alerted in the last week. We appreciate you watching our videos. Look forward to seeing you next week.